Hello guys, welcome back to my YouTube channel. Today we will discuss on our previous topic and continue my previous articles. Spot Bitcoin ETFs may face uphill battle to widen tokens appeal. As we have seen that volatility has heightened their appeal as primarily speculative investment, although they were originally created as an alternative to fiat currency established by and backed by governments. In this chart you can see the volatility in the coins. Bitcoin, which came into existence in 2008, has a far shorter track record than other asset classes that have spawned wildly successfully ETFs such as gold. That makes it difficult for investors to determine how it will trade over multiple economic cycles. According to Jeff Scott, president of Markov Processes International, a fintech firm that advises wealth and assets managers, drew a parallel between Bitcoin and emerging markets and commodities, two asset classes that gained traction in investors' portfolios in the 1990s and early 2000s. Those were asset classes for better understood by most investors that Bitcoin is short said. Nevertheless, all allocations were kept at a very low level at the time out of prudence. Many expect the bulk of the investment community to follow suit and make only tentative forays into Bitcoin's ETF, but even small allocation among a wide pool of investors could add up to billions in flows, Standard Chartered analysts this week said. The ETF could draw $50 billion to $100 billion this year alone, potentially driving the price of Bitcoin is as high as $100,000. Despite the interest in the crypto market, investors won't allocate a significant share of their portfolio in cryptos, said Ruslan, chief of market at fintech platform Yo Hodler. But even a small percentage of portfolio, specifically of institutional investor, can boost crypto market capitalization. Allocating 1% or 2% of a portfolio to spot Bitcoin ETF should create too many issues or too many risks for many investors, said Sandy Cole, head of digital assets and industry advisory services at Franklin Templeton. She added investors are hungry for something new as they are worried about real estate, unsure about bonds and stocks. Proponents of Bitcoin as an asset class also point to another much touted property. It is finite supply. The supply of 21 million Bitcoins is expected to be fully mined by 2140, in theory making Bitcoin resistant to inflation, a property that some investors also attribute to gold. Bitcoin is a truly non-inflationary asset, analysts at Invesco, one of the firms that received ETF approval on Wednesday. Views about Bitcoin are about centered around this idea of scarcity. Still, it might take a lot of convincing to change the mind of skeptics such as Robert Arnott, founder and chairman of asset manager and consultancy research affiliates. Bitcoin is not an asset, it is not even like currency, said Arnott, who has studied the evolution of assets allocation and views Bitcoin as closer to investments such as art and fine rather than stocks and bonds. I view it as a speculative vehicle, he said. There is nothing wrong with speculative vehicle as long as investors understand what they are getting into,